I don't care what the numbers are that come in as far as their subscribers, domestic, international, or their cash burn. We all know this company is growing like a weed, but it's a question of what does the market think about the price for the earnings growth that you're paying right now. So I'm looking for the response in the after hours tomorrow, because remember, this was a huge breakdown after the last quarter. If it breaks down 2 quarters in a row, that's going to be a strong risk-off move indication in the market. I think it's going to spook the retail investors. They're going to start exiting the ETFs. So I really want to see a positive response here just for sentiment's sake.
Doc, if Netflix does not deliver, you're going to have a hard time making the case that FANGs can take the leadership role again. Right. Because this stock always moves a lot on earnings.
True.
You cannot have a big pullback in this name if you want tech to resume its leadership.
And sort of like when Amazon was under some pressure a year and a half ago, Judge, it's because their CapEx, their spend. These guys were buying studios. These guys are renting out 13 floors of a building in L.A., and they've got competition coming from all angles. We knew that. Telephone, AT&T, with its acquisition of Time Warner. Voodoo over there at Walmart. Do they decide to make that a bigger thing, just like Amazon is, as far as giving it away to more or less their version of a Prime subscriber and so forth? There are so many competitors coming at them, and yet these guys continue to produce great content, especially, Jim, internationally. Yeah. As you said, you don't care as much about that international part, but that's, I think it's a huge opportunity. That's a moat that they're building that the other guys don't have yet.
Maybe it's better, Joe, that they missed so badly last time, because I don't know, how often do they miss twice? Yeah. Missed twice in a row.
That was
maybe that's on the bull side, and you've said that this is the one to hang hang on. This,
and I agree with Jimmy. I said this yesterday. I think from a sentiment standpoint for the marketplace, this is incredibly important. I think fundamentally, too, you're going to get an understanding of a couple of dynamics here that maybe has not mattered to the Netflix investor over the last couple of years. But I think now, when you look at where rates are, it's going to matter, and that's the debt story. And that's the fact that this company at the end of 2019 is going to have long-term debt somewhere near $14 billion. Scott, you're talking about free cash flow that's not going to be positive until 2021. So in a rising rate environment, I think this company's indicative of that type of debt company. And does the marketplace itself, when it looks at where rates are right now, does it have the appetite to continue really investing and kind of giving a free pass to these companies that have high debt structure?
Do I understand you correctly? And I really mean this genuinely. Are you concerned about their balance sheet, or am I misreading what you're saying?
I'm not concerned about the balance sheet, but at a certain point, debt and continuing, John's talking about all the initiatives, the growth in international, the content spend. That's all being done, Jimmy, by the issuance of high-yield bonds.
I totally get it.
They've issued $8 billion worth of high-yield debt over the last...
They should issue some stock. Let's
turn it to Steph. Steph, you've got Facebook over 3 months down 24.5%. Amazon is down 2%, but it's been down 9.5% in a month. Netflix is down 16.5% over 3 months, and it's been one of those upset FANG stocks of late. Is this the key to deciding whether the correction has run its course or not?
No.
Because if tech rolls over more...
No, I don't think so. Because I think, first and foremost, let me just say that I think the setup is really good, right? I mean, you're down 20% from your highs. The valuation has come in. It's still expensive, but valuation's a little bit more reasonable. Estimates have come down. Target prices have come down. You have rating changes. So the sentiment, again, as the guys have said, is certainly important. So the setup is okay, I actually think. But in terms of having an impact on the other stocks, okay, so for a day, it might, for sure, right? The other FANGs might sell off.
Really? You think just a day?
Yeah, because I really do think...
Isn't it going to be confirmation that this trade is finished for a while?
Because
that these stocks got way too ahead of themselves?
I think the fundamentals are different. You have different end markets. I don't think that social media is over for Facebook. Regulation is certainly an issue, but the stock is down so much already. It trades at 18 times forward estimates. It's going to grow 30%. And again, social media, especially video, this is where ad dollars are going. So Facebook is positioned well. And I think, hold on a second. Okay. I think that investors will come back and say, okay, Netflix might be a one-off and sell off the rest for a day or so, but then come back to where the fundamentals are. So